Hi, welcome to Main Street Macro. I'm Neela Richardson. It came as no surprise to virtually anyone on the planet that the Federal Reserve decided to keep rates at ultra low, near zero levels when it met last week. What did come as a bit of a surprise is that the Fed also hinted that they'd be raising rates a little sooner than previously suggested. Now, to understand the role of the Fed post recovery, when growth is expected to hit double digits in the in the second quarter of this year, one first has to understand that the Fed wears many hats. The first role that the Fed is playing right now is that of a thermometer. The Fed is constantly taking the economy's temperature to make sure that inflation is not rising too quickly and that the economy is not overheating. In that role, the markets expect the Fed to react if inflation is becoming a problem. And so they're reliant on the Fed to make sure that inflation upticks are temporary. They want to see that interest rates stay low and can stay low through 2023 when the economy is set to fully recover and the jobs market is set to fully recover. And finally, they want to see that the bond continues to push liquidity and cash through the market through their bond purchases right now at about 120 billion a month. Now, the second role that the Fed is playing is the Fed as a thermostat. You see, for many market participants, it's not enough to just react to economic conditions. They need the Fed to regulate those conditions to make sure that there is a constant source of affordable, low-cost credit that they can access. And in particularly, Main Street businesses need that liquidity now, maybe more than ever, to recover from the pandemic and grow their businesses. Now, the third role of the Fed helps both Wall Street and Main Street because it helps the entire economy. And that is the Fed as a stabilizer. You see, for economic growth to be sustainable, it's important that the Fed does not underreact or overreact to new data points. In fact, the Fed has to maintain its credibility, its independence, and its judgment to make sure that it fulfills its two mandates, that of price stability and full employment. If the Fed can do that, we might see more, not just more growth, but a stronger labor market recovery. Thanks for watching the Main Street Macro blog for this week. For more information on the week ahead, please go to adpri.org.